Welcome to the weekly Combo Podcast, where I'll go over the action in the market for the week of May 19th through the 23rd, and we'll see how things look for the week of May 27th through the 30th. This past week, the major indexes took a step back after last week's strong gain over 5.25% for the S&P. The S&P, the Dow, the NASDAQ each declined approximately 2.5%, while small caps fell harder, down about 3.5%. Friday's sell-off was triggered by tariff news, proposed 50% tariffs on EU goods and a 25% tariff on non-US manufactured iPhones, prompting a defensive stance. Trading volume remained below average, and the VIX is still above 20, signaling heightened caution among investors. Some key events. Two major events shaped the week. First, last Friday's Moody's downgrade of U.S. debt caused a brief dip, though the buy-the-dip activity cushioned the fall. Second, stalled EU trade talks culminated in Friday's tariff announcements, hitting tech and growth stocks particularly hard and driving investors toward defensive sectors. Looking at technical analysis, the weekly trend is negative, but the ADX indicator is still strengthening but trying to roll over. However, daily trends remain non-trending with the ADX below 20. The S&P 500 is hovering above its 200-day moving average, a critical support level. A break below could signal further downside. Momentum is mixed. Weekly oscillators such as the PMO and MACD are improving, but daily indicators are weakening. Looking at sector performance, defensive sectors such as staples and utilities outperformed late in the week, while energy and real estate lagged. Tech and discretionary are showing some resilience. Looking at the economic context, inflation remains below 2% and cooling according to Truflation, with no hyperinflation concerns right now. The 10-year yield, now above 4.5%, continues to pressure stocks, with bonds seeing a flight to safety early on Friday. Employment data shows stable jobless claims with no immediate recessionary signals. Gold is rising as a safe haven, while Bitcoin's strong correlation with the NASDAQ 100 continues, recently surpassing the 100,000 mark. As far as investor sentiment, it remains cautious but improving. Elevated short interest hints at a potential short squeeze if stocks go up. Recessionary probabilities remain low. Switching over to the intermarket analysis update, the S&P 500's CAPE ratio stands at 35.64, well above its historical mean of 16 to 17, suggesting overvaluation. A drop to 4,200 would align with a PE ratio of 20. Forward PE ratios show megacap stocks at 26.8, the S&P at 20.9, mid-caps at 15.3, and small caps at 14.4. Discretionary and tech remain expensive, while energy is the cheapest sector, but these values can last for years. Growth stocks are holding up when compared to value, though both weakened recently. The CRB index indicates a slight inflationary uptrend, with commodities such as corn, lumber, and copper in uptrends, while aluminum, wheat, and oil are in downtrends. Corporate bonds are in a downtrend, but Bitcoin's uptrend continues. The dollar weakened further against the euro, yen, and pound, while copper's strength signals economic confidence. Sector-wise, financials, industrials, and communication are holding up the best, while energy, real estate, healthcare, and semis are weakest. Rising 10-year yields above 4.5% and Japan's yield at 1.55% are pressuring stocks, with junk bonds outperforming government bonds. Now switching over to the deep dive update. The long-term VIX is rising but remains below 20. VIX-related indicators such as the VIX RSI are calming, and the VIX to S&P 500 correlation is low, giving no insight. The Ulcer Index is below its moving average, indicating lower fear. The S&P 500 is up 66.05% since the October 2022 low, but down 2.7% from its February 2025 high, sitting just 0.5% above its 200-day moving average. Small caps continue to underperform large caps. Technically, the QQQs score the highest at 73.8, while small caps lag at 7.2. European stocks, particularly the DAX, are outperforming, and gold is gaining as a safe haven. Now going through the What to Watch update. The market is closed on Monday for Memorial Day. Key data to watch this week includes core PCE on Friday and the next GDP reading on Thursday. The last reading was negative. The Fed is likely to hold rates steady with a 75% chance of no cut in June. Historically, May is positive, up 60% of the time since 1964, but tariff concerns and support levels are critical. Positive signs include the S&P 500 holding above its long-term pivot at 57.75 and key moving averages, with growth-to-value ratios and the advanced decline line holding up. However, negative signals include the VIX above 20, weak sectors such as semiconductors, and rising yields are causing concerns. Jobless claims remain stable, bond spreads are narrowing, and global markets such as the German DAX, which hit an all-time recent high, are looking more positive. In conclusion, the S&P 500 is navigating tariff concerns, overbought conditions, and rising yields. While growth sectors remain resilient, the 200-day moving average is a critical support level. Negative momentum and sector weakness warrant caution, but positive technicals and stable economic data do provide some optimism. Thank you very much, and I'll talk to you in the next podcast.